How's it going out there? It's December 8th. Now, Frank Curzio, the Wall Street Unplugged podcast, where I break down headlines and tell you what's really moving these markets. So trying to get interviews for Thursday. I had 2 cancellations, which is not really a surprise during this time of year, which is perfectly fine. So I'm going to probably push them to January. I might get one in. Really, really good interviews. But yeah, I'm going to try to set some up. And I don't really put people's feet to the fire here, especially during the holiday season, because it is crazy. We're even crazy here. Everyone's closing their books. A lot of these guys own their own companies and stuff. So unfortunately, to replace the interview, I have to bring back Daniel Creech. I'm really sorry about that. Daniel, how's it going, man?
It's going well. I knew there was going to be some intro. I wasn't expecting that. Thank you. You caught me off guard there. It's going well. Happy Thursday, everybody.
Yeah. So, listen, we're in kind of like this period after earnings season, right? And there's just new stories. For me, this is like a great time because you really could dig in when during earnings season, there's so many companies for us where, we cover a lot of companies and we want to listen to conference calls. I'd love to do that. I know you love to do that, Daniel. And, there's constant news and just saying, hey, did you see that company? Did you see what they reported? And this one's down 30%. When you have that little quiet period now, holiday season, everyone's really looking forward to next week, right? Next week's going to be really big with the Fed. And again, it's pretty much, I don't see them doing anything crazy. It looks like a 50 basis point hike. But I didn't think that we would see anything last week out of Powell, and he didn't say anything different, and yet we saw the market pop 4%, 4.5%, the NASDAQ pop 4.5%, everyone into crazy growth stocks again, and then here we are a week later, and we're right back to normal, right? So obviously it's a market-moving event, and there's a lot going on in between, but I feel like right now there are a couple of stories I want to talk about, and one of those is in the sector that you love a lot here is oil within Exxon, where Exxon just came out and said that they're going to raise salaries by 9% as profits are at record highs. If that's not enough, they said they're expanding their share repurchase agreement by $30 billion to $50 billion. They will already distribute by the end of this year $30 billion to shareholders, which includes $15 billion dividends, $15 billion share repurchases. They laid out a plan to double earnings and cash flow by 2027 to double them. That's only 5 years. So, but this year, when you're looking at the numbers, Daniel, they're going to generate $60 billion in free cash flow. And I just want to put that in perspective for people because I actually screened for this just to show you how significant that number is. To put in perspective, that's $60 billion. There's only 120 companies in the S&P 500 with a market cap greater than $60 billion. That's their free cash
120.
flow. 120 out of the 500 that have a market cap that's greater than $60 billion. Okay, and they're generating $60 billion in free cash flow. Okay, this is after I pay the bills. After this is money in your pot.
That's after investing $25 billion in capex.
Yeah,
to your point. I mean, that's leftover money.
I mean, that is leftover money. This is incredible. But I want to get your thoughts on it because again, everybody hates to. Well, not everybody. The politicians hate the oil companies. I might rant a little about that in a minute. But this is a company that you were very bullish on for a while now. You've been bullish on oil, and how does this impact everything going forward, especially with price caps and everything else? But it seems like the majors are doing pretty fine right now.
Yeah, absolutely. They are. And Chevron is doing well, too. They came out and said they're going to do CapEx in the $20-ish billion a year. I think this was a good move by the corporates, Frank, by the suits, as they're referred to sometimes, because they know they are about to get dragged in front of either a House committee or a Senate committee soon. Because when you're going to report profits like this during economic uncertainty, political uncertainty, it's just not a good idea to have a target on your back. Mm-hmm. And I think this is a way to get out ahead. The other side to that, very quickly, if I can give my opinion on this is why capitalism is the absolute best structure. And we're coming off a period we have this high tension between the railroad workers, and they wanted to go on strike, and there was some back and forth. The government had to step in. President Biden had to actually sign a bill into effect that said, hey, you can't strike. Here's the terms that were previously negotiated on. It's great to see companies, in my opinion, reaping rewards like this and then reward employees because they understand you got to give oil companies one good thing. And this is one of the biggest discrepancies and one of the biggest areas I disagree with on politicians is because of the timeline they're talking. It's easy to say, hey, I'm looking out. Frank, it's easy for you to say, you know what, I want to run this company and I'm looking out 10 years ahead. Well, I would argue everybody should do that, but that's difficult to implement. Oil companies literally have to look 10, 20 years down the road, or else you would never invest in a project because it takes billions of dollars, if not hundreds of millions of dollars, plus a lot of time to even get up and running. To see them reward their employees is fantastic. I don't know. I mean, did that stand out to you at all? And if you don't care, it doesn't matter. I mean, I'm just saying, like, raising wages basically above the inflation rate, so they're going to give everybody 8 to 9% ish, is, unless I read that wrong. Mm-hmm. I just think that's amazing, and that's not going to get much attention out of this story. I think everybody's going to focus on, and for right reason, the $60 billion free cash flow, the amazing numbers and performance. It's fantastic. I just hope that does get some. I hope that when they get dragged in front of the next committee, they point that out about rewarding people, because that's the best way to take care of individuals, is through the company standpoint, not because of government body that's telling you how to run your business.
I mean, we're talking about politicians, right? They don't give a shit about anything except themselves, right? So they just want to drag these people up there. And even though I love the irony here. I love the irony here, where we have a lot of these liberal politicians that are, did everything they can to cut drilling. No more drilling. That's the current administration, right? Where I'm quoting Biden here. No more drilling for oil and gas, right? He said going into, and now not even going into, but he actually said that when he was campaigning in last month, right? He said no more drilling. And we're like, wait a minute, no more drilling. So we have enough energy here. And you see what happens to our economy. And we saw that when we became the largest oil producer in the world. We're not dependent on anyone, okay? That's why we'll be much more powerful than most places in Asia, especially China, right? China has to, they do have their own resources and again, in coal and.
But to your point, still the biggest import of oil. Yeah, they have resources, but they're still needing everybody else.
They still need everybody else. And the fact that we wanted to take that away from the U.S., and we see it, right? So what do you have? You have more of these ESG policies, which, the E and environment we'll talk about here, push more wind, push more solar, less drilling, and less natural gas, less uranium, which those are super clean alternatives. Natural gas. So we need oil and natural gas, guys. We need it. Yes, we want to have that, and we want to be able to increase alternatives, but you can't just shut it off. And we're realizing that, right? We realize that with electricity issues. Even in Texas, we saw in Texas, oil country, Texas, right? So we see it in Texas, what happened. So we started in California, obviously, but here's these politicians where, no more coal, no more coal. Again, I get it with the environment, but now we're all going back to coal. Look what coal prices are, right? Because especially in Europe. But when you decide to implement these policies, right, and then you see supply get squeezed, and you don't want to blame Russia here because, yes, that war definitely hurt Europe more than us, right? We have enough oil right here to produce in the U.S., but again, we don't have lots of ties to Russia. So it's easy to go, everything is blamed on Russia. If you trip on your sidewalk, and politicians are blaming on Russia these days, right? You can't blame it on China. You're not allowed to because, they're in the pockets, right? Our politicians with China. We all know that. But now we have what? We have prices soaring, and they created this environment. Now you have these companies reporting record profits, and you're getting mad at them. You're getting pissed off at them. You're getting pissed off at the oil companies that our gasoline prices are what? More than double where they were. And yes, again, from the political standpoint, they're going to be like, we're $5 and it's $3, whatever. It was $5 and it's $3, whatever it is now. I mean, look how cheap they were a few years ago, right? Mm-hmm. So you're seeing what these policies actually do. But the irony to me is hilarious. How you're just going to shout out there and say, oh, now we're going to punish the oil companies because they're making too much profits. We're going to take money away from them. And here's Exxon doing the right thing. Raising those salaries more than inflation. And same with the Trump tax cuts. A lot of people didn't agree with them, but once that happened, we had 3 million employees get bonuses because of that. Right. You saw AT&T, you saw Waste Management. I mean, there's dozens of companies. Once that happened, they said, hey, they handed checks directly to the people, right? Which is really cool. But that's bad. That's terrible. We need more why? We need more money. This way the politicians can decide how to spend it, and we know how that works, right? We know checks and balances. A great example of that is the post office, right? How does the post office lose money when you have UPS and FedEx having, massive profits year? So, or
even another recent with the COVID issues and who got money and other countries were getting. I mean, you just talk about a mess because to your point, you have no record keeping. You have no process.
There is no process. And just, when I see the numbers for Exxon and I see these guys complain and you wonder why, coal's getting turned back on. And again, we're invested in coal in one of our stocks and really early to that trend. And now Europe, you're seeing, Germany turn to coal, a lot of places turn to coal because they have to, right? This is significant. We're talking about, heating homes where older people could, risking their lives now, right? This is where we are. And, just to not look at the numbers or just shout at the top and say, no more oil, you're killing the environment, you're crazy. We have to do this at a slow pace. You can't do it fast. And I know to get in the current administration, you have to promise a lot of things, crazy liberals, and it worked because you guys won, and I understand. But no one thought that you would follow through on a lot of these policies. Usually politicians say yes, 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 and lie through their teeth and don't do it. And for me, I can't believe that we're at this stage where we're saying no more drilling. I mean, that makes us incredibly powerful to the rest of the world when we can supply our own resources. And now that we have the technology to do it, and a lot of countries still can't do it, it just amazes me why we won't unleash that, especially natural gas. What is wrong with natural gas? What is wrong with natural gas? I don't get it. So we could be exporting the shit out of it every place. Now we have all these, LNG facilities, which were import facilities in 2008-9 to import natural gas. And when fracking took off, we were like, holy shit, this is amazing. We had so much natural gas, we're burning it for free. Now a lot of these have
we
transferred.
were right. We got one thing wrong. We just got to reverse this.
Yeah, they were like, oh, wait. We have a good idea.
We'll just ship it, yeah.
Yeah, the whole thesis is like, oh, we're going to import. Oh, wait. No. Well, since we have this, let's just export, right? It's great. And Shiny was first to the party there. But, for these politicians and grandstanding, it just amazes me because to me, everybody sees everything now because you have YouTube, you have videos, you see what they're saying, you see... on both sides, too. I mean, just to see Schumer, talk about immigration and just hammer and say, no immigrants ever should come here to the, it's like, 7-8 years ago. And now you see the policy like, welcome them all in. It's just, it's all about getting elected and shit. But, we try to talk about this stuff because we have to, right? And you could be on whatever side you are and you could say, well, it's Russia and Trump is an asshole and it's whatever. I don't really care what you think about that. I really don't. What I care about is making you money. So you listen to the podcast. I mean, the profits for these oil companies are incredible. You've seen oil prices come down, and I think it's going to lead to an opportunity to really purchase these things, especially with the price caps in Russia, right? And let's go there because, you've seen oil take a hit here, coming down, but now we have, news that China's opening up all at the same time. Everything's fine in China, which is not. We have really good sources that tell us that, again, they're shutting down censorship. They're not opening as quick as people think. I know it's in the news, it is, but... you could see how bad it is there, okay? But however, we are catching a bit in oil. We are catching a bit in the markets today because, China's COVID policy. Finally, hey, it's the flu. It's a version of the flu, and most people are going to be okay, and we don't have to shut down everything. You can't travel anymore. So, that could lead to more demand, which, we need, right, when it comes to oil, if you're bullish in it. So, what are your thoughts? Because there are areas that we've been covering within oil, but there's one specific area that's really booming right now, right? And they reported earnings. We mentioned it, I think, a few weeks ago, but I want to follow up. So
yeah. Something's got to give here, Frank, in the oil market. So yesterday, you're exactly right. We're going to talk about shipping here in more detail, the shipping stocks. But listen to this from yesterday's Wall Street Journal, Frank. Last month marked the first time since 2006 that the S&P 500 energy sector has traded within 3% of its 12-month high, while the price of West Texas Intermediate retreated more than 25% from its one-year peak.
And what was the first part of that?
The first part of that is that it's the first time since 2006 that the S&P 500 energy sector is trading within 3% of 12 months highs, while oil is over 25% lower.
Yep.
What does that mean? You have this huge break between oil stocks and oil prices. Now, why is that? Oil prices in the short term have gone down. They hit 130 after the Russian invasion of Ukraine. Now they're in the 70s-ish. You've had a lot to do in between there. You had ups and down production cuts by OPEC and announcements. You've had the Strategic Petroleum Reserve release from the Biden administration. You've had you've had some increase in drilling here in the U.S., which is good. And then you have other sanctions around the world. To your point, something has to give. I think the risk on the next move in oil is higher than lower, but I've been wrong on that. But here's the crazy thing about investing. You could argue, hey, Daniel Creech has been dead wrong on the price of oil in the last 3 to 6 months. Yet I'm still correct on ExxonMobil and Dollar Stock Club. We're still correct on Arch Coal, different, obviously it's different energy. And my point is that the market is always forward looking. And what's going on right now is the sanctions that just went into effect this Monday was the cap on Russia oil, seaborne Russian oil. Mm-hmm. So now the U.S. and the European Union got together and said, listen, basically the Western insurance companies control 90-ish% of all insurable seaborne traffic. What is into effect now is that, hey, these companies can't insure a vessel unless they can prove that Russian oil, if it's Russian oil, that it was purchased for less than $60 the barrel cap. Okay. The irony here is that the $60 is higher than where Russian oil is trading currently, and it's higher than, I believe, the 3-year average that it's been trading at. So that's kind of ironic. In their defense, the politicians are saying we don't want to disrupt the flow of oil. We just want to try to negate Russia making too much money. Right now in Turkey, even if it's not Russian oil being carried through straits and different paths, Turkey is holding up. There's a traffic jam. We joked about this yesterday. There's like, as of yesterday, there were 16 to 18, depending on who you're reading, tankers holding equivalent of, let's say, 500 to 800,000 barrels or up to 2 million. So very large crude carriers, VLCC, carry 2 million. The Suezmax carry 1 million. And then you got these LR2, sorry to, I don't make this up, people. Follow along with me here, that hold 500 to 800,000 barrels. The odd thing about sanctions is just like every other government policy, Frank. A, you got to try to implement them. B, you got to try to enforce them. And then is there any repercussions and or accountability? Oilprice.com, freightwaves.com, Splash 24/7. That's a good name for a website, in my opinion. They're all talking about, hey, this is all basically just honoring your word. So you stop me and I say, yeah, this is a piece of paper. We bought it for $59. It's Russian. We're good. There's no port authority. There's no international agency right there. So it's all just this murky ways. I say all this because Nordic American Tankers, NAT, we've talked about, Ardmore Shipping, ASC, we've talked about, Frontline Holdings, FRO. They all reported very good earnings. And I'm going to give you some numbers here, Frank, about the irony here as oil prices, remember, yearly lows, okay? Tensions, not all-time highs, but let's just say highs. Nordic American Tankers focuses on, they have about 19 boats that carry 1 million. They have the Suezmax, okay? So each boat basically carries, we're rounding here, each boat carries 1 million barrels of oil. Frank, in Q2 of this year, they were getting a daily rate of $20,080. Okay, that was Q2. In Q3, the most previous recorded earnings was $27,850. So about 38% quarter to quarter.
Day rates, yeah, guys.
Day rates.
That's the shipping. Okay.
Yes.
That's how much they cost for the ships, yeah.
Year over year, just to show you the volatility. So 20,000, 27,000 last 2 quarters. Go back to last year, that was $7,800 during the second quarter and $5,800 for Q3. That is a volatile environment. It takes Nordic American Tanker.
How long are those contracts for?
Well, so they can be months or years. And on the spot rate, so you have time charter rates, which is, hey, I'm going to give you this boat for the next 2 years. And then after 1 year, we have an option to increase that. The spot rate can be, it depends on voyages at that point. The wild thing here is, Frank, Nordic American Tankers, it's $8,000 a day for their cost. Okay? Well, obviously last year, when you're at $7,800 and $5,000, you're losing your butt. Now you're at $20,000, $27,000. To start the fourth quarter, Frank, which we're currently in, on their conference call, they said that 74% of their ships are already booked for this current quarter at $54,000 a day rate.
And they were getting $5,000
a year ago. They were getting 27 the previous. So in the last 3 quarters this year, it's gone from 20 to 27 to now 54. Okay, they're going to double their dividend. Now the good thing is that
dividends, I mean, it's over it's 4% now.
Right, but they're variable. So as you always say, hey, you can't just go chasing for yield because there's a lot of oil companies,
They pay a percentage of profits, a percentage of whatever. So that could be, a dividend of nothing, 5%, 9%, or whatever.
Exactly, because you can say, hey, this last quarter, this is paying 9%, but if they have a down earnings and you don't get anything, obviously the stock's going to crater. What I don't like and why these aren't buy and hold forever. Frank, you have young kids. These are not stocks you buy and hold and, give them to when they grow up and get married or, whatever. Because they're trading vehicles more the less.
Yeah.
What I like about this is that they've very similar to the oil producers. They've kind of found, I love John Petrides in your interview a week or so ago when you guys talked about finding financial religion in the oil patch. Shippers have done essentially the same thing. They're cutting down their debt. They're paying down debt. The problem one red flag, is with Nordic American Trust and Nordic American Tankers, NAT and ASC. They do these at-the-market offerings, which just issues more shares. And what does that do to shareholders, Frank? It dilutes the shareholders. They've both come out, both NAT and ASC have come out and said, listen, we don't need to do this for the foreseeable future. The only reason we did that was because last year day rates were so low, we didn't want to take on additional debt. I can understand that. The shipping area, they're all headquartered outside the U.S. for certain reasons. The shipping area, you know this more than I do, Frank, but it's it's a gray area. They use a term called shadow fleets.
It is
it's
a gray
shadow
These
industry.
companies are, these companies, it's not that
I'm not trying to be
believe
rude,
the numbers, but it's for me, it's always, but it's a cyclical industry, right? And right now, but
exactly.
And I think even, listen to you here is when I was bringing up the chart for Nordic here, and you see like the low was 140 and the high was almost $4, and it's $3 now. It's actually down 12% yesterday.
Yep.
And it's up a little bit today, but a lot of people think like, hey, that's the cycle, but we might be in the fourth inning of the cycle where we could easily see like a double or triple from here from these things, and with day rates. So, you're saying what oil companies, you have to look at oil companies, right? So what do oil companies do? And they're really smart. It's almost like the Walmarts and everybody else, right? What do they do when they have large fleets, right? Some of these large retailers is they want to lock in oil prices, right? So go to the futures market, and when you're locking in those prices. You want to obviously do it at low prices when you're Walmart, but a lot of these companies, when oil is trading higher, you're locking in those prices. So you're hedging, and those hedges could be for a year from now at much, much higher prices. So what you're going to see is even when oil comes down, and this is one of the reasons why I remember I spoke at a Stansberry conference like a year and a half after they let me go there. And it was funny because I said there, and I was like, anyone who owns oil, I think it was like 2014 or something, it was right like near the top. I said, anyone that owns any oil company, I don't care if it's a major or whatever, and I knew a lot of people did, I was speaking for another company, they didn't mind I was there. I said, you should sell everything oil right now, sell everything out of it. And they were like, you're crazy. I'm like, listen, the hedges are about to come off, and when they come off, they're going to have to lock those things in at $34 cheaper, right? So now it's a different scenario where, even though we're at 70, you're saying, how come these oil companies are still staying up? Well, you have to look at the hedges. I know there's companies, I think there's Continental that never ever hedges. But some companies do hedge. It could be great or it could be bad. It's more consistent, right? Because I know uranium companies who don't hedge either. And if, again, so you're going to see, a higher beta, meaning if oil prices go higher, the companies who are not hedged you're going to see those stocks move a lot higher compared to the companies that are hedged, and vice versa if it reverses, right? So, but right now, even with the hedges in place, and you're looking right now with these companies, like you're locking them in, like you said, at 50,000. If they're locking them in for a year, I mean, the cash flow is going to come in for this company. The dividend is going to be skyrocketing. They're not issuing any more shares. If this continues into next year, even a few quarters, I mean, this thing could, you look at 5,000 last 50,000 now, and you're still seeing that demand. You look at a sector within the oil market that I feel like not too many people talk about that could really explode from here. And now you're getting a discount. Here's Nordic Tanker, one of the biggest in the industry. That was $4, and now it's $3, right? So, again, you could look and say, oh, it was $1.50 and I missed it, Frank. But it was, recently at $4. Now it's pulled back significantly. But the fundamentals are still there for these guys. And people may be looking at oil, right, Daniel, and saying, the oil price is coming down. Oh, I want to get out of this. Not necessarily. Because we bottom out here and you see oil prices go higher, again, it's the industry is in good shape, especially looking at hedges, and you have to look at hedges. And for me, I was able to make, I would say, a very, very good call, probably one of the top 5 calls where oil absolutely collapsed, because I read a 150-page Goldman report, and I did a ton of research on it showing all the companies of the hedges that were coming off, and I was able to actually pinpoint which companies to avoid, which companies to buy puts on, and which companies were really well positioned for another year or so. And it mattered. Yeah. I mean, you saw it wasn't like every oil company went higher. It was, it was a very good indicator of how to pick winners and losers in the oil industry and the hedging. I understand that if you're an individual investor and listen to this, you might not have access to it. You could if you Google it just to see, but you could go to the conference calls, and when you see the transcripts and you get Seeking Alpha for free, there's other places you get it for free. They usually tell you their hedges there every quarter, how much to hedge and how long to hedge. That's something to be looking for too as oil prices come down, because it means those profits can stay relatively high, and you're going to see these things really beat earnings estimates next quarter because they're locked in at much higher prices. But again, you have to dig in and do the research and do research in different sectors. But I know you've been all over this sector, but this is very interesting to me.
Well, it's just odd because what I'm continuing to think through is you have these day rates that are skyrocketing. Okay, that's impressive. That's good. But the market's going to price some of that in. Regular guest and good friend of yours, Frank Holmes from U.S. Global Investors. Mm-hmm. Frank, he wrote an excellent piece just earlier this month on December 2nd. He thinks, and is kind of speculating, that day rates on different types of oil shippers could hit $200,000 a day next year. Now, they're different worlds. So ASC that we've talked about does oil, and they do chemical products and things like that. Nordic American Tankers focuses on oil. My point to...
What was the symbol of the other one?
ASC and NAT.
Okay, so ASC,
FRO is another one.
Yep. This is Ardmore Shipping. Again, if you're on a YouTube
Yep.
channel, we show charts of this and show just some of the research and show our capital IQ, and you can see different.
Another couple, International Seaways, INSW, and Scorpio Tankers, STNG, or a couple other ones.
3 to 16 was the high, but now it's under 14.
And what's interesting, if you're looking at those, every one of those yesterday sold off hard. Now, why did they sell off? I don't have a crystal ball, but here's what went into effect on Monday. We talked about the price cap. We talked about this ship log jam outside of Turkey. Depending on these contracts, if you're not delivering them on time, or their fees or their fines, whatever's going on, some of this, I've been checking our Capital IQ systems. I've been checking all the companies for SEC filings and press releases. I haven't seen anything on the tanker jam right now. But Frank, going forward, one of the reasons I'm continually bullish on day rates to continue higher is that as the smoke settles and everybody gets kind of more of their bearings around these sanctions, the newest sanctions in place for Russia, and let's not forget, in February, more sanctions on refined products go into that. That'll be a whole different world. But right now, there's so much uncertainty, and on these conference calls, the shipping contractors are talking about, well, if we have to take different routes to transport from different ports or different areas, that's going to take longer. Frank, if you're a semi-driver and you used to do a trip from here to Jacksonville or here to Miami, and now you're going to start going from here to Cincinnati, Ohio, or here to Maine, that's a hell of a deal. You're not going to charge the same amount for that. It's not going to take you the same amount of time. So there's a lot more uncertainty to be unfolded here. However, uncertainty is great for energy markets. Earlier today,
that's true. We always say uncertainty is terrible, but it's
terrible for stocks in general, but it's great for energy markets.
It is great for energy.
Earlier this morning, Frank, the Keystone Pipeline got shut down because there was a detected a leak. Carries 600,000 barrels roughly a day. Guess what? Oil spiked right away. Natural gas spiked right away. I'm not saying it's going to remain there, but my point is that we've talked about this in the past. We have such a tight market, meaning supply and demand is so closely knit that any variation is going to cause a lot of volatility. And the main driver here on oil prices remains to be OPEC, and they're going to do what they have to do to keep Brent, world oil, closer to $90 a barrel. It's not going to be there 24/7. So don't say, oh, well, they just kept quotas on the December 4th at the same as they did last month or whatever. But my point is that there is so much uncertainty around here. It's basically like we're sitting here smoking around a bunch of gasoline and just not anticipating anything. And that's why, I want our listeners to not only get some exposure. So yesterday on the down day, I bought a little bit of ASC and NAT as well, just because I want exposure to this over the next couple months. We can check back in, see if I look brilliant or silly, Frank. But I just want people to understand these are trading assets. These are not buy and hold, but these are a way to capitalize off of a lot of uncertainty and, in my opinion, silly political agendas. And that's what I'm trying to do here for everybody on the podcast. Frank.
No, that's cool. That's cool. Another thing that hit the news story, and we'll end with this, is Walmart. Walmart came out and said that they're going to need, how much was it? An adjustment to count, and what do they call it? You get.
Well, Target uses the term shrinking. I guess that's
shrinking. Shrinking is
is
a very nice term to say that people are robbing us.
Yes,
people are robbing us at stores, and they're stealing. And now you're seeing companies, a lot of companies. I mean, you're seeing Apple stores. You're seeing, Apple's just so big. They don't have to say anything. But it's getting to the point where Walmart, and Target are actually saying this on the conference call, right? And how much wasn't it? I mean, it was an incredibly large number.
Target threw out the number of $400 million operating margins and earnings. I don't know if it was yesterday. It was earlier this week. The Walmart CEO was on CNBC, and he said, I forget which anchor asked him, but it was a great question about, hey, some cities have, because to your point, fundamentals matter. Mm-hmm. When times are good and prices are great and everybody's flush with cash, not that you're okay with getting stolen from, but it's like the old mafia movie. Hey, you can't steal too much. We got to steal too. We know what's going on.
The skim of the skim and the skim. You got to expect it, but we don't want the skim. The skim was
exactly
casino, right?
Yes. Yeah. Well, during fundamentals matter, so now they're pointing it out, and Target's saying this 400 million mark. The anchor that asked the Walmart about, hey, some cities are not enforcing or have very lax standards on shoplifting, and it's hard to prosecute certain people for certain crimes. The Walmart CEO came out and said flat out, yeah, we're going to close stores if that doesn't change, and we're going to have to raise prices. The only good from this, and I know this is going to sound like I don't have a heart, and if I do, it's black as can be. That's not the point here. The only good thing is that the way you get policy changes is when it's economically viable. So when you have Walmart and if people get to the point where you're scared to go to a Walmart or a Target in the USA, that just shows you how stupid things are. The only good news is that those companies will have the power to get the people in line at the top to say, listen, you guys got to do something about this. When you can't go get groceries because of store hours, shoplifting, or crime, that is hopefully when we will get our heads out of our you-know-whats and make a policy to actually prosecute people for theft, robbery, etc. It's not common sense. The good news is that can all be fixed, and it will at some time. Just be careful when you're loading up for your freaking gallon of milk, I guess.
Yeah, no, and it's not just Walmart. Again, that's a lot of money, right? You're talking about coming right out of the bottom line, right? So it's like, hey, we have all these products, and they give them away for free because they got stolen. But when I see this, I think you can look at demographics too, because if you're looking at areas like in Florida, and again, I came from New York. I grew up in New York most of my life, so I don't know anything about guns, and it's always a touchy subject depending on what side you're on. But I do know that never, ever, 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 ever happens here, and it doesn't happen in Texas and most places because in Florida, they actually get on TV here, and this was just the other day. I should play this clip. And this happens a lot, though. We see this. This is on like regular news channels. This isn't like, something happened. This is like just everywhere. So Florida sheriff got on TV, again, public TV, and he shows this criminal and says how this person had 17 arrests, and they arrest him, but they're going to keep releasing him. It doesn't matter. They're going to keep releasing him. He gets out. So he broke into the house, this person, and the homeowner shot at him. And they said, listen, we don't know who shot at him because he wasn't too sure who shot at him. But he goes, listen, you're not in trouble. That's perfectly fine. He goes, we prefer you shoot anyone that breaks into your house. And he goes, in fact, this is what he said on TV. In fact, we have gun safety classes every single Saturday. So if you take it, you're going to shoot a lot better and save the taxpayers a lot of money, basically, if you kill these people. So, nobody robs houses here. Nobody robs, and people carry guns. It's different. Again, coming from New York, it's really weird. I bought my first gun. I never owned a gun. Just it's in my house, safety. I don't carry around my car or anything. But some people just have 100 guns and are over the top and craziness. Again, you've come from I told this story before.
The crazies, yeah.
No, I told you, what is it, Montana and whatever. But when I was shooting,
Montana, yeah,
Ohio, Montana, when I was shooting this gun, and it was like 6 feet away, and you would tell me, that's usually, that's how close. That's what you have to prepare for. And I'm hitting a little off target. Just again, I don't shoot guns, right? I'm just learning how to shoot guns, and you just take it like here, boom, 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 like 6 in the middle. I'm like, holy shit! I'm like. I'm keeping a gun in the office just in case I have any bad stock picks. I'm telling you, Daniel is going to shoot you right between the eyes. It's Florida. It was great. I was like, man, some people are just like great. And me, I'm like all over the place. I'm learning. And I had a great subscriber, helped me buy a gun and actually came here. And then we went there and shot it and stuff like that. And it's just funny how the laws are so different, right? Where nobody would ever think about doing that. But if there's no consequences,
right.
And and I've seen this, and you've seen videos where even the security people, they're just like, hey, let them take whatever they want, whatever, and they back off.
Yeah.
You can't even do anything because a lot of times, even when you do something or beat the crap out of something and somebody, you're going to get brought up on charges in some of these places, which is insane. So it's the reason we're talking about this is because it matters. You see a company like Walmart saying we're going to close stores is a big deal, but you might have to look at other companies because if they're robbing Walmarts, you're robbing other places, that's going to impact other companies significantly, and it could result in how do we make money on this? Well, let's see where they're going to open the stores. Let's see which stores they are closing. I mean, obviously they're underperforming if they're giving away their stuff for free because it's getting stolen. But it's a trend you have to watch because I never thought I'd see it. You see it in the news here and there, and depending on what side you're on, they amplify the story or they suppress it. But the bottom line is, you talk about the largest retailer in the world. $400 million. It's a big deal, especially in a market right now where profits are getting squeezed and consumers are cutting back. That turns out to be a lot of money. So you're seeing the change in demographics, kind of like what we saw with COVID, how more people stay home. They found out ways to make money and, how it impacts the economy and how that might impact the economy forever, where, we're still seeing shortage of jobs, even though this economy is terrible because, again, a lot of people found ways to make money from working from home because they were forced. So when you see these demographic changes, it is going to impact companies, and it's something to look out for because I never thought I'd see a Walmart or a Target on a conference call warn about this and saying that it's impacting them now. That's how big it is. And, be careful out there.
That's a great point. And my takeaway here is that I will look for Target and Walmart in the future to talk specifically about this because I think the opportunity here is a layup. If the stock drops based on, let's say, Target and Walmart come out and raise those numbers and say, hey, theft is getting worse, we're going to limit store hours or whatever. My opinion would be the stock would pull back on that. That would be, and I know Target and Walmarts aren't exciting, but we're trying to make everybody money here. if these pull back based on crime and theft and nervousness, that is a great buying opportunity because it will get fixed. You're not going to have, unless we go down the road of Mad Max, and I haven't even seen those movies, but they look like total chaos.
Yeah.
And everybody, you can see the trailer and get my point. That would get fixed, and that would be a great opportunity to buy boring, well-run companies at
it's going to suck for the consumer, but here's how it gets fixed.
But
you close all the stores, right, in a lot of the major cities where you're seeing this, right? So now you're closing those stores, and now you got to raise prices in the ones that are seeing the highest demand and that you're safe in, which means that your bottom line is going to surge.
And eventually, you will get to the point where politicians change rules and protect, you'll get back to common sense and not let people steal from one another, and you'll get more of a rule of law, and that'll be great. I don't think that that'll last forever, and if they get hit because of that, that would be a good buying opportunity.
No, absolutely, absolutely. Yeah, definitely a story worth mentioning. I just couldn't believe that number, and I couldn't believe Walmart actually came out and said that. So listen, great stuff, Daniel. Really dug into oil, gave you lots of ideas today, like we always do. Let me know what you thought about this podcast, though. FrankCurzioResearch.com is FrankCurzioResearch.com. Daniel, what's your email?
Daniel at CurzioResearch.com.
Okay, cool, guys. Thank you so much. Really appreciate all the support, and I'll see you guys next week. Take care.